Hey everyone, welcome to the Fifth Person's live webinar. My name is Rusmin, and with me here today is Adam.
Hi.
All right.
Hi, everyone.
Yeah. And today we're going to talk about coronavirus and the impact for the virus on the economy and also some of the businesses out there. Okay, so this is actually a very last minute webinar that we prepared for you guys. And yeah, but we're going to have a lot of things for you to share with you.
Yep.
All right. And Adam is going to share with you on
the past market crashes in the US and in Singapore as well. To give you a bit more context about what happens whenever there's a crash.
Okay, so if you can see us and you can see and hear us loud and clear, please let us know in the chat box. All right, and we're going to start this webinar very, very soon. Okay, so just to make sure that everything is working in order. Okay, all right, cool. So it looks like most of you can see us. Hi, Dale. Hi, Chia, Malcolm. All right, Serene, Jonathan, Ron, all right, and many of you guys, right, that's dropping by to say hi. Okay, so a very good evening to all of you guys, and we're just going to wait for
maybe 1 or 2 more minutes.
2 more minutes.
To make sure the room is full.
Yes.
Thank you once again for joining us in this live webinar. Hi. There's a lot of highs there.
There's a lot of hi, Benedict, Kelvin, Tommy, all right, Victor, and yeah, so, and some of you already have questions which we're going to answer later on. Okay, so if you have any question in mind for us today, we will try to answer as many as we can. All right, we're going to have a presentation probably going to take about 20 to 30 minutes.
Yep.
And then we're going to leave the rest of the time for Q&A. Okay, and I know a lot of you have a lot of questions to ask, especially recently the market has so much correction. Okay, be it in US or even in the Asian market. Okay, so all right, so looks like we are getting more and more people coming in, and yeah, cool. So if you can see us, so those who just joined us, right, and you can hear our voice loud and clear, please let us know. Okay, if you can't see or hear us, no matter what I say,
you have no idea what we're saying.
You probably have to restart your computer because a lot of feedback saying that they can see us and hear us. Some of you have blank screen. You probably might want to restart. All right, Apple has updated on the software that this is privacy issue that you need to do a lot of restart, which is quite irritating actually. Yeah, although I love
That's
Apple
why we
brands.
use PCs. You know? No Apple, man.
Okay, so
great company though.
looks like
all right. I think we should get going, right?
Yeah. Okay. So we're going to switch ourselves out. I'm going to share with you the presentation slide, which is going to be the main focus. And later part towards the Q&A, we're going to again.
Yeah, you're going to see our faces again for the Q&A.
Yeah.
But for the next 20 to 30 minutes, we're just going to focus on the slides and what we have to share with you. So just sit back, relax, and just enjoy the show.
Okay, so let me get the slides for you guys. And here we are. All right, we're going to switch ourselves out. Okay, so I'm going to pass this to Adam. All right, Adam, here you go.
All right, so we're still here, so don't worry if you can't see us. I'm sure you can hear my voice. Loud and clear. So once again, thank you so much for joining us. So as you know, a lot of the markets around the world have been crashing. The S&P 500 has gone below 10%. So we're just going to give you a bit of history to what happened in the past and what's probably going to happen down the road and what you should do when you reach a situation like this. What you're going to do with your portfolio, what kind of stocks you're going to look at. So lots of stuff we're going to share. So once again, before we begin, this is our standard disclaimer. This is not a recommendation to purchase or sell any of the shares mentioned during this presentation. All right, so everything is strictly for educational purposes only. All right, so I don't know if this is the real virus, but this is a picture of a virus. Anyway, we are in the midst of a coronavirus crash, okay? So just to give you a bit of history, we're just gonna go down memory lane. For some of you, those who are very, very old, I'm not that old, but this is the chart of the S&P 500 from the 1950s all the way till now, okay? So, and these are all the crashes, all the major and minor crashes for the US market since 1950, All right, so you can see there's been the post-Korean War, the Eisenhower recession, the Kennedy slide, credit crunch. The Nixon recession was really bad. So all the black boxes that you see are the major crashes. All right, so there are about 5 or 6 there. And the most recent one, of course, you remember the global financial crisis. Everyone remembers that. Before that was the dot-com bubble. And then way before that, in 1987, you had Black Monday, which was the single biggest drop in one day.
So many crises.
So many crises here, so many crashes. But what do you notice about the stock market overall? It's been going up. Over the long term, the stock market will rise. And it's because of 4 main reasons. Number one is inflation. Number one is population growth. You have economic growth. And of course, the fact that the S&P 500 or any other index comprises the best basket of stocks in that country. So if one stock isn't doing too well, it doesn't pass the criteria, it's going to be replaced by a better company. And that's why the index always tends to rise over the long term. But of course, if you see through all the crashes over here, it goes up, it goes down, you get crashes and all of that. And if you zoom in and you just notice the crashes, it can be really, really scary.
Yes.
And if you feel a bit of panic and fear right now because of the crash, I just want to remind you, it's only 10%. And if you're feeling like 10%, right?
Yes.
And if you're feeling like, oh my God, this is the end of the world, then we need to remind you that there have been so many more crashes and for a much bigger impact as well. So, and if you look back at it, and this is why I want to show you this chart, because if you look back at the whole thing, you zoom out, you have a helicopter perspective of the whole thing, it's okay. Yeah. Okay. So this is for the US market. I'm not going to go into the events and individual events and all that. If you're interested to read about this, I wrote the latest article on our site on fifthperson.com. You can go check it out if you're in the history buff and all that. Okay, let's just go to Singapore right now. So this is the Straits Times Index, all right? And the data goes far back as 1990. It doesn't have as long as the data as the US markets. So 1990 for the Straits Times Index. And if you take a look at this, we've had about 1, 2, 3, 4, 5, 6, 7, 9 major and minor crashes, all right? Yeah. And of course, the major ones, the global financial crisis as well, the dot-com bubble. And for us, the Asian financial crisis was really, really bad. Okay, that was in 1997. I remember that I was actually still in school. Wow. So it wasn't that bad for me. I was still playing football and all that stuff. But I remember it was tough for some of my uncles and aunts and all that. So,
I don't even know what the hell's going on there. I was playing my marble.
Still in Indonesia, right?
Indonesia, yeah.
Indonesia was pretty badly hit as well, so you didn't know and Ruth didn't know what's happening.
I didn't know what's happening.
Yeah, I was still in school. So anyway, so you can tell my age more or less. But this is the Singapore market, okay? And once again, you see when it comes to a crash, it goes down and then it goes up. And over the long term, the index tends to rise. So in the case of Singapore, not as impressive as the US.
But I think there's one thing that we need to take into account is that Singapore companies pay a lot more dividends as compared to a lot of US companies.
Yeah. So, but again, even then, it's overall it tends to rise, right? Yeah. So from 1990, it was about 1,000 points. Now it's about 3,000. So still rise, not as impressive the US, but still rises up. All right.
So stock market as a whole will go up.
Because of those 4 reasons that I mentioned to you, except in Japan, because it's just shrinking.
Lost 3 decades.
All right, so this is just the lesson that we wanted to share with you, okay? Now, of course, the most relevant crash in Singapore with regards to the situation today is, of course, in 2003 with SARS, because SARS was a virus as well. Yeah. It was a scary time. I was doing my NS then. And I remember having to take my temperature twice a day. If you had a cough or fever, you got to just don't touch anyone, stuff like that. SARS was really, really serious. I remember that. And of course, we want to know what happened during SARS. So if you want a bit of a recap, the Straits Times Index crashed about 33%.
Wow.
So this is a big one. All right. It didn't really affect the US market so much. If you actually go and check the US chart, I won't go back now, but if you have a look at it in the article, the SARS didn't really affect the US, but it really affected Singapore. And I think a lot of us, this is still very recent for a lot of us, we remember this period when everything just seemed to come to a standstill. No one was shopping, no one was doing anything. and the market just went down 33%.
But back then we don't have a smartphone, and I think
no smartphones.
People are not so panicking.
You know what? I don't know if anyone was queuing up for rice and toilet paper and stuff like that.
Okay.
I don't know. I can't remember, but yeah. So this is what happened in 2003. So what's going to happen next for us now?
Yeah.
Yep. Okay. So this, as of today, these are the total number of cases in the world. 92,000. It's probably more by this evening. We did this. We plucked this in the morning just to give you the latest figures as soon as we can. But 92,000, and now
80,000 of them are actually from China.
From China, yeah.
Right.
So China is ground zero. But the thing is now gone beyond China.
Yeah.
Yeah. So that is why the markets crashed the past week, because now it's no longer contained in China.
Yeah.
We have Italy, South Korea, the US has seen some cases now. Iran as well, yeah. So it's starting to take hold around the world, and that's causing a lot of fear, and that's why the markets have crashed. Okay. So in the US, in Washington State, it's a state of emergency. So it's not the entire US, Washington State. And the question is, when will this peak? When will this end? I think that's the question everyone is asking right now. So when is this going to end? And the honest answer is, reading all the articles that I've come across online, is that no one really knows.
Yes.
Because you have experts from everywhere giving all sorts of predictions. And I'm sure they've done their research and done their homework and, given their predictions. But the fact that all these experts give so many different predictions means no one really knows when this is going to end. So the answer is we don't know.
Yeah.
Right. So this goes back to our point. Of the fact that we can't really predict the stock market, because if we can't predict something as like a virus outbreak, we don't know when it's going to peak, how many more cases there are, how far it's going to spread. If we don't know all of that, and you have experts like predicting everything, how are we going to know how this is going to affect the stock market for how long?
Yeah.
So no point predicting the stock market, but we'll give you some tools later on what you can or should do despite the crash right now.
Yeah.
Okay. So
we're going to cover more.
We're going to cover more of that later on. Okay. But the point is, we just say, don't try to predict it, but we're just going to play the odds. Okay?
Or some people say that it's actually going to be April, but that was when the virus was just mainly in China.
Mm-hmm.
Right. But now things are going out of control. We are seeing more cases in Korea, Italy, and I think this is likely going to prolong, right?
Yeah.
So it's definitely not going to be in April. Okay, this is according to a lot of doctors, experts out there.
Mm-hmm.
Yeah, and then now we still don't have really a vaccine.
Yeah. So the scary thing is, I think, like, for example, it's gone outside China, and you have countries like Indonesia where you have 2 or 3 cases.
Oh man!
And you go, yeah, right.
I have a serious questions on that.
Yeah, and the fear is, if they don't take care of it, then the outbreak is gonna just go on for much longer.
Oh, as an Indonesian, I have to tell you that our immunity are a lot stronger.
That's actually quite true. I haven't seen who's been sick in the last 2 or 3 years. But anyway, so the point is, because it's gone beyond China. I mean, China is doing a great job at trying to contain the thing, but because it's gone beyond that, we really have no idea. All right. So anyway, we're going to move on. So I'm just going to give you some idea of what we can expect. Okay, but this is not a prediction. All right. So this is a chart of SARS in 2003. Of how the cases grew exponentially.
Nice.
You see that curve going all the way up. And then it reaches a point where it just kind of plateaus. All right. So this is the point.
Yeah, right?
Yeah, that's right. So it goes exponentially, everyone's getting infected. And then it just, through our efforts, our healthcare efforts, there was a vaccine. Or was there a vaccine?
No, there wasn't.
There was no vaccine, right? Just basically the virus just like flared itself out. And the cases just kind of like slowed down and has come to a plateau. So this is what we're looking for when it comes to the coronavirus as well. Yeah. We've gone through that exponential phase. We don't know if it's...
That is only in China.
In China, right? Yeah, that's the thing. So we're going to show you more charts. So what we're looking for is, we want to see is exponential growth, and then the moment it kind of like just tapers off, that is when this is what we're looking for, and this is probably where we think that this is probably going to get better, hopefully. Yeah. All right. So let's have a look at... this is the COVID-19 coronavirus chart as of today.
Around the world, right?
This is worldwide. Yeah. All right. So you see that there's this exponential growth, And then this sharp spike that you see in February is because of the way that China counted the cases. And then on that one day, it counted 15,000 cases because of the new criteria. All right, but actually it's just, you just see the whole thing rising, and then it still looks like it's rising some more.
Yeah.
Because of the outbreaks around the world.
Looks like it's still quite early to tell.
Yeah, still early to tell. So it doesn't look as if it's going to plateau anytime soon. So if you ask me, do I think this is going to be gone by, I don't know, next month?
No,
I don't think so. Yeah, because it really depends on how the other countries around the world respond to the outbreak as well. Not everyone's going to be like China, and China can tell its citizens to just stay home and not go out. You try telling Americans to stay home, they will take their guns and go out. Right? So this is a totally different society. You can't tell, it's different. It's just a different society. Yeah. Anyway, that was a bad joke. But anyway, no offense to anyone. But so this is the point. We really don't think that it has plateaued yet. It's kind of look like it's going to just grow maybe a bit some more, right? All right. So this is in China. So this is as of today. It's kind of like, it looks like China is doing its best to take it under control. Looks really good so far. But still 80,000 cases.
They're doing a good job,
Yeah. But
the source of it.
Yeah. So this is in China, so it looks like they have it under control. But we just have to see what's going to happen elsewhere. Okay. So the question is it time to invest? Because we don't know when this outbreak how long it's going to last, when it's going to end. So the question will come. So then, do I invest? Do I wait?
I think that's what most of you have.
So that's what you all have here tonight. So Rusmin's going to come in and going to give you a bit more ideas, and I'm going to come in as well. So now we're going to answer this question. Is it time to invest?
Okay. Yeah. So in fact, actually last year we just looking at the trade war, and the first half of the year we have a lot of headlines about trade war between China and the US. And second half of the year, I think we have seen Hong Kong and a lot of riots they actually took place back then. And before we even get over from the riot, I think earlier this year we have this COVID-19, right? And how serious is COVID-19? If you look at some of the chart that is being reported in the media, I think based on what we are seeing is COVID-19 is obviously a lot more infectious, contagious, right? And the fatality rate is a lot lower, single digit, as compared to SARS, which is about 10%, MERS is about 34%, Ebola is about 44%. That's crazy, right? But we still can't underestimate COVID-19, despite they have very low fatality rate, right? And a lot of death cases is mostly involve those older people, right?
Those with lower immunity 50 to fight the virus.
60 years old. It tends to have a lot of difficulties in breathing. So I think we still can't underestimate this because it can scale really, really fast. Okay, so if I were to go back to and summarize all the past virus, right, since 1981, we have HIV, and then 2003 we have SARS, H5N1, H1N1, and then today, of course, we have COVID-19. Okay, so if I look at the last chart, okay, and I just saw this chart from The Age, which I read last week or a couple of weeks ago. I actually modified it a bit. And the maximum correction for every crisis that took place ever since the first case was reported to the lowest. Okay, HIV was about close to 18%. Of course, the disease, the virus is not the only reason that caused the market to panic. Like for example, SARS back then, I think we have Iraq war, US and Iraq was having war, and that was actually affected the panic as well. And SARS was together with it. And then of course in 2009, if you look at H1N1, back then we have global financial crisis. So there was a big drawdown over there, not just because of the virus, but because of a few reasons. Okay, so but in essence, every single virus here, if you look at it, I think stock market usually react negatively on the first few cases. Okay, so the maximum correction for each virus here, on average, if you average them up, is about close to 14.5%. Okay, so this is according to MSCI World Index. So we are looking at the whole world, not just US, not just Singapore, but the whole world index. On average, it's about 14.5%. And based on COVID-19, we have about close to 10% correction now. So we are about close to two-thirds before we reach the average.
Yeah.
Right. So we don't know whether this is going to get worse or not. Okay. So that's a big question, right? But what's more important is that from the past crisis, I think if you look at the longer term point of view, a lot of them actually have improved. Okay. In terms of returns, if you measure from the lowest to the next highest, before the next major correction, this is the run up. Okay, so if you look at HIV or AIDS, I think over the next 5 years you have get a return of close to 200%, right? And then SARS is about 100%, swine flu is about 100%, and of course today we are talking about COVID-19, which is unknown. Okay, so on average, if you add up all the returns, it's about close to 93.1%, right? So this is provided if let's say you invest in this kind of crisis, you can expect a very good and positive return, but you need to hold it for the next 3 years, okay? Because virus, they don't last long. They typically last a year, 2 years, right? They won't last, right? And SARS actually now is gone, okay? And of course, the family members, now COVID-19 came, and then now we are in that kind of situation, okay? So my point here is that, instead of trying to time the market or panicking, right? And I see this as an opportunity, right? To actually for us to start to look into the market, because a lot of indices now actually have big correction. Okay, I'm going to share with you how much it is corrected later on, but basically my point here is the door is open.
It's open.
It's open, right? Open. I mean, it's just a small gap over there. You and I can go in together, but it can't support everyone, right? So this is exactly the time I think it's not fully open, but I think we can start to go in.
Yes.
We don't know whether it's going to shut or it's going to open up even bigger. Okay, but for me, once you see opportunity, it's a good time to start to go in. Okay, so if you look at the market, all right, I think most of you who are watching this webinar, I believe most of you probably either exposed in the US market, Singapore, Hong Kong, or even in Malaysia. All right, so these are the 4 markets. If you look at the recent COVID-19 impact on the stock market, I think US is probably one of the biggest impact, right? And it's probably the fastest, right, in terms of correction.
Yeah, it was the biggest weekly drop since 2008.
2008.
Yeah.
Wow.
So that was the great financial crisis. So this is a very short.
Yeah, and that's the reason why we have this webinar actually, because just over the last 1 week, I think we have seen so many things. I was so busy.
Yeah, we were so busy. We just
I have to sleep at 2 a.m. every night. Yeah, because of this, the impact was too fast. And Singapore has been correcting actually since earlier of the year, and US after that, and Malaysia and Hong Kong also following. Of course, Hong Kong last year we already been affected because of the Hong Kong riot and the trade war. And we have actually been very busy with this market shopping around, right, and finding companies to buy. Okay, so let us look into some of the industry that actually being affected by COVID-19. I think this is basically some of the companies that will be affected, and you are going to see their revenue or even profit is going to come down, right, in 2020. Okay, so these are some of the losers. You're probably going to see retail, right, as people choose to stay home. Right, a lot of companies or a lot of retailers will suffer. Okay, nobody going to the malls. Okay, there are still people going to the malls in Singapore, but
because we're doing it well.
We're doing well, right? Yeah. But on the first week, I still remember, it was very quiet.
I remember going out on a weekend, Orchard Road. I got off the train. Only 5 people got off the train on a Saturday night. I was like, wow, this is great. But that was just when it was just
panic, right? Panic, which is what US is seeing, Korea is seeing now. Yeah, so a lot of companies like Starbucks, all right, KFC, right, and they actually shut down their store in China when the outbreak first occurred, right? And a lot of malls, REITs actually like Sasa, which is an outlet mall, they own a few outlet malls in China, they also shut down, and some of the CapitaLand Retail China Trust Mall also shut down. Okay, so these are some of the companies that's going to get affected. Even IKEA also closed down some of their stores in China. Okay, and so if you are looking for opportunity, retail is going to be a good segment to look at because they are the one that get affected the most, right? And they are the one that get hit the most. Basically, the prices will probably correct even more. Okay, but once the crisis is over, they are the one that likely going to recover a lot faster. Likewise, if you look at the transportation industry, I think as less and less people going out, the taxi demand will probably drop. Less and less people are going to take buses, and even some of the ComfortDelGro, they actually reported they shut down some of the driving center in China. Okay, so this is also another industry that you can look at. Transportation companies, be it in the US or even in the Singapore, right? ComfortDelGro is probably one of them. And and also the biggest sector that also being affected is the travel industry, and a lot of flights are being cancelled, tours are being cancelled, and even for my family, they're actually planning to have trips this year, and I told them to postpone.
I mean, that's a small thing because even the Olympics may not happen.
Oh yeah, in Japan, right?
Yeah, and the Euro 2020, so the football tournament may not happen as well. So it's that's sad for me, but but it's a big thing. it continues to just break out somewhere.
Yeah, so some of the airline companies will be affected. Booking agency like Booking is going to get affected.
Yeah, Booking is a big one.
If you look at, let's say, Expedia, if you look at some of those companies, they will be badly affected. Airlines like Southwest, and some of the cruise companies like Carnival Cruise, and a few others, even hotel like Intercon, right? And casino players.
So we're giving you a lot of ideas right now. So these are not recommendations, but we're just giving you a lot of ideas. You can really have, if you like some of these companies, you're familiar with them, it's time for you maybe to just have a look.
If you happen to have owned any one of these companies in your watch list, I think it's really time for you to really look in them. We are not recommending any stocks here, but just, to give you some idea, it's time to start to look around and then start to buy. And I'm going to share with you some of the strategy later on, right? And some of you also started talking about SATS, Straco, right? And some of these companies are really badly affected because of the COVID-19. Okay, and some logistic companies also being affected, right? Because a lot of flights are being cancelled. So, usually plane you have this belly
for the cargo,
right? Yeah. So a lot of flights are cancelled. So a lot of freight rate will actually go up, and that will affect a lot of stuff, right? And the drivers shortage and stuff like that. Okay, and I think the worst one that get hit will be the supply chain. Right, and because factory in China, they shut down because of the virus. And if you look at the global context, China accounts about close to 40% of the global trade versus 5% in 2003 when the SARS happened. Okay, so China is a big role now, and because of the shutdown and the supply chain issue, I think a lot of companies will have, where they order some parts from China, they may have issue, getting the finished product out.
Yeah, because no one's going to the factory to work.
Yeah.
Because it's just no one's allowed to go out.
Shortage of manpower. China government also asked some of the factory to close down.
Yeah, right. So that's why things are being delayed and all that.
Yeah, so supply chain is the biggest problem now. Even you have Apple rerouting some of their supply into outside of China. Ford, Toyota, Nissan, they also closed their factory, right? And and then we have friends also who is in the apparel business because she orders stuff from China, and now China shut down, so she's totally no stock.
Nothing to sell.
Nothing to sell. So this is the serious case of supply chain issue, and it impacted a lot of companies, not just in China, but outside of China, who rely on raw material sources, parts from the China itself. And how big is the impact? I think it's too early to tell, because everyone is just saying that they feel the impact, and it's too early to tell whether this shutdown of plant is going to last a lot longer. Okay. So and of course look for those companies that are going to surface up, and you don't want just to look for those companies that have a lot of debt. You want to look for those companies that are financially strong in case the crisis lasts for a couple of years. At least the company can be able to go through. Okay, so what are some of the winners? I think some of the winners will be the gaming stocks. I think as people stay home, you and I will play more games. Right? I don't play
I wish I had the time.
You wasted the time.
I wish I had the time.
So companies like Tencent, EA, Blizzard, I mean, they are also affected, despite the fact that they are going to be the beneficiary. But of course, some of these companies, they have a lot of other businesses out there. So it may not be the case where, straight away they will benefit from this altogether, right? And we have e-conference companies like Zoom. If you look at the price of Zoom, I think surge in the US, right? Surge big time, because more and more people work from home, and they're going to use more this type of video conference kind of software. And there are streaming companies like Netflix, if you think it's a good company.
Yeah, questionable,
right?
But it's
but it's really a good time, right? Now, this is not a case where I argue with you, whether it's a good or bad, but it's really a time for you to look at those companies, because opportunity exists. Okay, and of course, other apps like Facebook and Alibaba, e-commerce is definitely going to be the beneficiary, but because of global supply chain disruption, I think they're also going to have impact on that as well. Okay, of course, healthcare is definitely going to going to benefit from this. If you look at some of the glove players in Malaysia, actually they actually impact. I mean, they enjoy a very good growth there, and the share price has actually gone up quite significantly, because the demand for this kind of healthcare related stuff are actually on the surge now, right? And and some of you might also want to go and look at this stock called the one that sell Corona, right? So this is companies that owned by Constellation Brands that listed in the US. So this is one of the brands that is badly affected because of the similar name they share with the coronavirus, although it has nothing to do with the virus. And you look at some of the news out there, this company is making losses now because of the coronavirus. Okay, poor thing, right?
I think some people just can't tell the difference. Yeah.
I hope one day people don't call fifth person buyers, right? Otherwise you're going to get affected.
Yeah.
Okay. So this is something that you can go and take a look. I mean, I have not looked at this company, but just to give you some idea. And a lot of you also ask, what are the COVID-19 impacts on a lot of property investment company like REITs, right? So if you look at across the board, I think my short answer to your question is that there isn't a big impact on REITs itself. Okay, of course, retail REITs. Okay, healthcare, no question, because the leases are generally very long, 15 years. So, and the demand is definitely going to increase because of the COVID-19. So, no doubt on healthcare. Retail is going to suffer for sure. A lot of retailers are going to get affected because the traffic in the mall actually fall quite significantly because of the COVID-19. But as a landlord, as you know, you tend to don't have this issue because the tenant is the one that's facing the challenges. As a landlord, they can offer the rent rebate, but it is case by case basis. All right, so I don't see a big impact there unless there's a prolonged crisis with this COVID-19. When I say prolonged, means 3 years, 3 years to 5 years. Of course, obviously, we're going to see a lot of retail REITs. The rent is going to drop. Okay. And likewise, office, I think so far, it is still quite safe. Again, if the economic market slows down, a lot of businesses are not expanding, the office demand is likely going to drop. Okay, so I'm not seeing the office market rental rate to go up, but it will probably go sideways, and if worse things happen, the rent may start to come down because businesses are not expanding.
Yeah, but it's not going to be immediate. It's not like the virus hits, then all of a sudden all our rents are going to be cheaper.
Correct.
Yeah, then maybe some landlords are giving some rebates.
Not so much on office, but retail I think is probably affected the most.
Yeah. So it's not going to be immediate, that's the point.
Yeah, and the leases with office generally are 3 years, 4 years, so they still have some buffer on that. Right. Industrial, likewise, the same thing. Of course, again, it depends on the economy. If the economy is not doing well, we don't really expect a lot of rental growth from that. And the one that's going to affect it the most is probably going to be hospitality REIT because people are traveling a lot lesser today, right? And that will impact them. And if you look at just hotel occupancy when the SARS happened back in 2003, just Singapore and Hong Kong alone, you look at occupancy drop from 80%, right, in Hong Kong to as low as 20%. Same thing for Singapore, right, it went to as low as less than 40%, right? But then it quickly recover after SARS just get over, I think in the matter of 6 months or less, right? So, of course, now the question is, how should you go about buying any of this stock? Let's say if you realize there's any of this stock that you are looking at affected by COVID-19, the share price have been coming down, and then you like the stock, how should you go about buying those stocks? Okay, so I'm just going to share with you some of my take and the strategy that I have personally. Right, and if you are someone who's just beginning to invest in the stock market, obviously if you don't know what investing is all about, don't invest. Right, you should be learning how to invest first before you invest. But let's say assuming some of you have gone through some of the experience that either you read book or you have been preparing for this day to come.
That's awesome.
Have you been preparing, right?
That's great. Yeah.
Right, so I don't know whether you still continue to wait, but right, let me just share with you what are things that you can do, right? Let's say you have a new portfolio. Right, you can actually break down your purchases into a few tranches, 3. Okay, so the first tranche that you can deploy your stock. Let's say, I think for anyone who want to invest in the stock market, you need to have at least a portfolio diversification strategy, right? At least 10 stocks to have in your portfolio, right? And of course, you can own up to 30 stocks. It's really up to you. It depends on your risk appetite. But let's say just 10 stocks. For example, for someone who is starting up and then he or she probably have, let's say, 50,000 to invest. Okay, so you may break down into 3 tranches. So let's say 10 stocks, then each stock is going to take up 10% of your portfolio. They need to segregate. Okay, so every time when the stock market corrected 10%, so in this case, we are referring to the MSCI World Index, which is 10% because of the COVID-19, right? And we can actually start to deploy your first tranche. Okay, so instead of deploying your 10% in that stock, immediately you just deploy, let's say, 4% or 5%. Right, and subsequently, if you have second tranche, you can actually deploy if the stock or the stock market index drop globally and it has corrected another 20%. This is where you can deploy your second tranche, okay, your 3%. Let's say if you deploy your 4% in the first tranche, you can deploy your 3% in the second tranche. And let's say if the third wave came, all right, and the stock market dropped another 10%, that's a 30% correction, right? And over the history, we don't have a lot of 30% correction.
Yeah, it's
maybe
pretty rare.
Very rare, right?
Yeah.
So once every 20 years.
20 years, yeah.
Yeah,
maybe.
so I think the other time that this happened was the 0809.
Yeah.
And today we are almost 10 years, 10 years across the mark over there. Okay, so if this really happened, at least you still have the third tranche. Okay, this 3 tranche strategy really helps in a way that in terms of not just the strategy on buying, because the fact that we can't time the lowest, you can buy the lowest, there's one thing that you take care of this. All right. If you can't time the lowest, you can use this to buy at least second low or third low. Okay. And third, you can actually use this strategy to help you with psychological reason behind human fear. Okay. A lot of time people are scared when the stock market drops because they don't have cash. They have nothing to do. So they don't know what to do, and they don't have cash, and they just sometimes they panic. So if you have your third tranche that you stand by, set aside, you know that, oh, if the stock market drop, in fact, a lot of you will wish that the market drop, you can actually use this third tranche to deploy your stock. And yeah, and it drop further again.
Okay.
I think you probably have to wait.
So what we're saying is don't go all in.
Don't go all in.
Don't go in right now. It's dropped 10%. Go in 1/3 of your portfolio.
1/3 of portfolio.
1/3 of your portfolio.
Across different companies.
You still have to diversify, start looking around. But you can start putting like 1/3 of the money you want to invest. Start looking for great stocks to invest in.
Yeah.
And then like what you're saying, Rusmin, is that we don't know when's the bottom.
Yeah, we don't know.
If it goes down some more, you don't want to be caught out thinking, oh my, I wish I had more money to invest. So just start to deploy the next 30%.
30%.
Yeah.
So
this way you always have bargains on the way down.
And you have to accept the fact that you can't buy the lowest.
Yeah.
Right. And this is something that you and I, we can't buy the lowest. And we can only have a strategy in place to take care of that. Right. And you shouldn't regret buying now and then the share price drop further down, because you can't time the lowest.
It's very hard to point to predict the bottom.
Yeah. So, but now the opportunity is there. I think you should start to look at it and then see it as an opportunity. Okay, but of course, all of you in this room will have this new portfolio. Which means how I wish that, I just started investing and then I have 100%, but I'm not. I have almost invested all of my cash, and now the market corrected. I don't know what to do. All right, and every day I look at the stocks, the prices just keep coming down. I look at my portfolio. A lot of them are in red. I'm so scared. Okay, so if you're in that kind of situation, you already have an existing portfolio, you only have little cash left, then of course in this kind of situation, what you can do is you can do portfolio rotation, right? And you don't have to be afraid, you don't have to be scared, you don't need to panic. You just need to look at all the stock that you have in your portfolio. Look at those companies that are weaker, where you think the business model are not so great anymore, and the company's fundamentals are deteriorating. And what you can do is go out and start to find those companies that have better quality. All right. So what I mean by better quality means the company have lower risk and the business are much better, and the companies by today the valuation should be a lot more attractive. Okay. So you can use this opportunity. Obviously, those companies that you bought lower quality tends to be in the losses. So I think as an investor, for me, I usually will cut the losses, all right, and then take the money and invest into a good quality company, because this is exactly the time where you can do your portfolio rotation, because a lot of good quality companies will also drop in prices. It's across the board. Okay, so you don't want to hang on to your losses and hope that you recover. You don't want to feel very painful to cut losses. Don't see it as a loss. You see it as a way to unlock the cash and then take it to invest into better and quality REITs. Right? You want to compound your gains. You don't want to compound your losses. Okay, so that is very, very important, that I think a lot of you need to take this into account, because so far I met a lot of investors. They are often very scared to cut losses. I don't feel very painful to cut the losses. Okay, if you have a cancer in the portfolio, you want to cut the cancer away and then switch it.
I think one of the reasons why people are reluctant to cut losses is because they kind of focus on the individual stocks.
Yes.
Yeah, but if you take a step back and you look at it from a portfolio level, so you're thinking about how you can grow the overall portfolio rather than how you can save this stock. It's a very different perspective when you look at it that way. So think about how you can grow your overall portfolio. So when you have that mindset and you're thinking, how can I grow my overall portfolio? You're going to immediately want to think, if I'm going to do that, I need to cut the cancer, like we've been saying, and then put in a much better stock. So it's no longer about the individual stock. It's about your portfolio overall, your NAV. You want to grow your NAV.
Yeah. I have a stock that I cut recently, 50%. off.
Yeah. Okay, yeah, I mean,
So I just switched into, because I come across the better companies that I think can make back the money they have lost in their stock. So what I do is very simple, just cut and then take the money and invest into better stocks.
yeah.
And today is up.
Because whether you own the lousy stock or you own a good stock, your portfolio value is the same.
Yes.
Correct? At that point. So why don't you switch it to something that has a lot more potential for you to do better?
Yes.
Rather than hold on to something that's may not be the best.
This is your best chance to do it,
Yeah.
right? If you don't do it now, once the stock market recover, the lousy stock will stay it is or even weaker, and those good quality stock will just recover very fast. Okay, we have seen that over the past crisis, many crises, a lot of good companies just continue to perform. They hit the new record high year after year, right? And I mean every single wave. And this is really the time where you should seriously go and continue to look at your portfolio. It's the best time to review a portfolio. That's the reason why over the last couple of weeks I've been sleeping late at night because of this. I have to review the portfolio, restructure the portfolio, review some of the companies, and see what are the opportunities out there because of the recent correction. Okay, so yeah, so once you have done all this in place, I think you're in a very good position to take advantage of the crisis. Okay, so once you're done, all right, all you need to do is just stay calm. And I think most importantly, stay safe, right? I think the best advice that you can listen today is wash your hand.
Yeah, wash your hands with soap.
Soap. And then if you are sick, go and see doctor, all right, check your temperature, all right, and yeah, things like that. That is something that I think is probably more important than looking at stocks.
Yeah.
Right. So that's something where you need to take care of yourself. Okay. So all right, I think this is the content that we have. We're going to leave more time for Q&A. And of course, for the we'll go into specific companies analysis.
Yeah.
All right, but on this, we only do this for our some of our members,
our DM Pro, our Dividend Machines professional members, and Alpha Lab members. So we're going to have a separate webinar. If you are either one of these members, we're going to have a separate webinar exclusive to you. These are paid members, so we're going to go more in depth into individual
specific companies.
And we're going to analyze them and give you a lot more insight and education on that.
So so look out for emails. I think probably going to be next week.
Probably going to be next week.
Yeah,
when there's still opportunities out there in the market. So stay calm and stay safe. So now we're going to have Q&A. You can ask questions in the chat box, and we're going to answer as many as we can. We apologize in advance if we can't answer all your questions because maybe too many of them, but we just try to pick the best ones. And I have one great one for you, Rusmin, right now, since I've been looking at the chats.
All right, sure.
So
go ahead.
I think one of the viewers today was asking about Great View.
Okay.
Right. So Great View, so we were talking about prices are coming down, and all of that, and he gave the example of Great View. Great View is coming down. I know you are into Great View a lot. What do you think about that situation?
All right, I think that companies, I think the fundamentals are still quite solid. Because of the COVID-19, the China, a lot of factories are being shut down, and that is one of the companies that probably going to be affected by the supply chain disruption. Okay, so I think in the first half of 2020, I'm not expecting any good result for that company because of the situation that's happening in China. But if you were to look for this company, hold it in long term. I think 5 years down the road, 10 years down the road, this company, COVID-19 will probably be gone by then, and this company will be business as usual. And I think the business will grow a lot bigger as compared to what they did in 2019. Okay, so I'm still bullish on this company, but obviously I do expect a dividend cut because of the COVID-19. Okay, so this is something that we are still monitoring, and we are waiting for the full year result. Of course, for some of our members, next week we're going to cover more on this company.
Okay. Another one. Someone else has a question about SBS Transit. Do you want to cover that?
Okay. So SBS Transit, the price has been coming down, and honestly, I have not really looked at the SBS Transit. All right, and we're probably going to cover that again also in the next week.
Okay.
Yeah, but the company is still solid, and I don't think people will stop taking public transport. because
in
of
Singapore,
COVID-19. Even now, I think a lot of companies in Singapore are resuming back their business, right? And I'm starting to come to office because when the COVID-19, I stay home most of the time.
Yeah, we were home. We have a flexible work arrangement since forever, actually. But because of the virus, we really did stay at home.
They shouldn't be affected that much by the COVID-19, right? So just that the prices has been reacting, and this is the time where if you're looking for SBS Transit, it's really a good time to look into them.
Okay, so I think I remember seeing a question about SIA. Okay. And you were saying I think it's a very low price. It's at $8 and all that. So is SIA a buy? Now I have my 2 cents on this. When you're looking at SIA and you're looking at it because of its price, my question to you would be, why are you investing in SIA? Is it because you think it's cheap and there's an opportunity to just make a quick buck? It's $8 now, maybe it's going to go up to $10. You make a killing and then you get out. So, I mean, that to me isn't really long-term investing. Yeah. And our focus when a market crash like this happens is that we really want to buy great businesses and hold them for a long time to come. And then when another crash comes, we're going to buy them again. So SIA to me isn't exactly, I mean, it's a great airline, but it's not a great investment compared to so many other stocks that you could look at out there right now. Like, for example, Booking. Because Booking is the biggest online travel agent in the world, and has really been affected by the slowdown in travel. So I would look at, for example, between A and B, between SIA and a company like Booking, which one would I look at? If I had like $5,000 to invest, I'm going to put it in Booking.
Oh, yeah?
Yeah, compared to SIA. So I'm not interested in SIA just because it's cheap. So that would be my question to you. Why are you investing in SIA? Is it because it's a great company, or is it just you're looking for in and out, that sort of thing?
So I personally also prefer to invest into asset-light business. SIA, they need to invest a lot of money on the fleets, and that is going to take out about the money away from the profit that they've generated, all right? So Booking, I think, Adam, you have highlighted that. It's probably one of the companies that all be looking into that because of their business model. And when people, I think, 10 years, 5 years, 10 years down the road, you and I are going to travel a lot more, right?
Yeah, so, everyone's going to, the middle class is growing. And when you have more disposable income, what do? You travel. Yeah. So
some people stay home.
I love to stay home. Every time these guys tell me to go to Malaysia or some other, or to the US, I'm like, I don't want to go. I want to stay home. But
majority of people out there,
but people travel. But anyway, so so the point is, take a look at the good companies. Don't just look for opportunities to just make a quick buck.
And did I just see someone talking about SATS?
Right?
So SATS is also one of the companies that has a strong monopoly in Singapore. It's just that when I look at SATS, you're going to expect a dividend cut for them because COVID-19 has affected them quite significantly because a lot of flights are cancelled. So when you flights cancel, you don't have in-flight catering, and the revenue is definitely going to drop from there. And that is actually a big chunk of their revenue. Okay, so that part is definitely going to get affected. And so SATS is also one of the companies that you can look at, but don't be surprised if they cut away the dividends, right? Just that 5 years down the road, I think SATS business will probably come back to normal. People are coming back to Singapore because Singapore is a great country to visit, and that's the reason why we live here, right?
All right, some really quick questions here. How do you buy Booking? Booking is listed
in the US.
In the US.
Yeah, we are not recommending.
We're not recommending anything. Here. Just that
you need to go back and do your research analysis. All right. For Alpha members.
For Alpha Lab members, we actually have a case study where we actually go through the business model and all that to help you understand the company a lot better, so you can make your own decisions about your investments. We just help you save time. But once again, always do your due diligence before you invest. Okay. So let's have a look at some of the questions. I'm just going to go scan all this.
A lot of questions related to the companies. What about Singtel, right? I think okay. I mean, telco industry definitely not going to get affected. In fact, I think people are going to use more data.
I'm near my data cap for this month.
I need more data. Well, but you don't buy Singtel because of that reason, right? You need to look at other competitive reasons because Singtel today, they have a lot of competition in the market. You have fourth telco coming in, you have price war. I look at my telco bill, it's coming down every year. Every time when I renew, the prices just get cheaper and cheaper. And I know it is good for me, but it's not good for telco companies. So personally, I will avoid telco businesses. Right? It's just the industry is just cutthroat.
Yeah. There was a question here by Jonathan about the banks, Singapore banks. So what do you think about the Singapore banks? I think that's something that we could...
I still need to take loans from the bank. So
yeah, it's something you can really consider. I think Singapore banks in general are very solid.
Yeah.
The MAS is not going to mess around with our banks. So not like the banks from somewhere else. Really. Yeah. Our banks are very solid. And you can have a look at them if you like the banks.
Yeah.
The yields are pretty attractive right now.
I think 5%.
Above 5%.
About 4 to 5.
Yeah, about 5% actually.
Yeah.
So have a look at them if you're interested in the local banks. Yeah. So
how about Joseph asked, how about the payment industry? I think payment industry like MasterCard and Visa, they shouldn't get affected by that because even if you stay home, I still buying things online actually. So I still need the cards to do processing. So I don't think that is going to get affected. Yeah, so there are so many companies, there's no way to cover all of them.
Okay.
Okay, so what do you think of WAF REIT? WAF REIT basically is a company that is listed in Hong Kong. I think they own some of the very famous property in Hong Kong CBD area, Prime District, like Times Square, Harbour City. If you've been to Hong Kong, you probably know that these are the two malls that has been very crowded. Okay, so that company was affected by the Hong Kong protests and the prices came down quite a lot. And recently, the COVID-19 just make it worse, right? And of course, Hong Kong, I think as a whole, I think the fundamentals of Hong Kong has deteriorated because people have lost confidence in them, starting to lose confidence, especially Chinese, because a bulk of the Chinese tourists a lot of Hong Kong tourists actually come from China. And if Hong Kong people don't like Chinese naturally won't go to Hong Kong. Okay, whether this will go on, I'm not sure, but I don't think protest is going to last for 2 years, 3 years. It's lasted for almost close to a year, right? Coming this June is going to be a year. But I think they are starting to get tired of it. And even when I look at the news, I also feel tired for them. Okay, so I don't think protests will last long. But definitely we're not going to go back to the same old peak that time when we see Hong Kong where there are a lot of tourists. Stuff like that.
Yeah,
so I think WAF REIT is still quite strong and steady. It's just that you don't expect another peak as we have seen before the Hong Kong protests.
Yeah, okay. So someone had a question, he wasn't sure about how we deploy the trenches. So he wasn't sure, was it 10%? And then drop another 20%. So it's actually 10%, and then drops another 10%.
10%.
And then drops another 10%.
Yes.
This is when you start to just deploy more of your capital instead of going in all in. So someone had a question, what if I deployed everything already?
Then I think...
Then you just need to work harder and save up.
Whether you can pawn anything.
No, I'm just don't borrow to invest. but save up more.
It's not like a no-brainer case today in today's market because market has just corrected for about close to 10%.
Yeah.
Right on average. So it is a good time to go in. It's not a good time to all in. Right?
Yeah.
So just put it that way.
Put it that way.
Okay. So and Daniel asked, I think while looking at some of the question, should we consider Sheng Siong since everybody is buying tissue paper? Okay, I mean, that's not his exact question. If it's above historical low yield. Right, I mean, you can look at his Sheng Siong if it's, let's say, trading at attractive valuation. But today, I don't think Sheng Siong is attractive. But you can go and study and see whether they are really attractive or not, right? And yeah, Keppel DC, the leases that they have is also quite long, so I don't think they're going to get affected by that. But the prices have run out so much, so I don't even bother to look at Keppel DC, right? And CC also asked about how about Hong Kong land? Okay, Hong Kong land is similar to WAF REIT because their properties are mostly in Hong Kong, and it's just that Hong Kong land above their properties are actually office. So office are less affected by the retail market sentiments, okay? But because the retail scenes are not doing well, so businesses, they also reconsider whether they should put Hong Kong as their base, right? And a lot of them actually go straight to China now. So office market also have deteriorated a little bit in Hong Kong, but it's not going to just the end of the world, right? You're probably going to see a decline. Again, we won't see another peak or the time where we have seen the peak where the rent actually gone up to so high. Today, you're probably going to be 20% lower. Depends on after the crisis whether the riot is going to come back. If it comes back, then it's just going to make things worse, right?
Yeah.
But it is very cheap.
Yeah. Okay? So there was a question about the S&P 500. Is it a good time to invest in the S&P 500, which is an index? So, and I was thinking about how to answer the question. And again, I want to bring up a very good point about investing in individual stocks. when we say invest 10%, when the market goes down 10%, invest something, 10% invest something.
Yeah.
It's not just go out there and blindly buy.
Oh, yes.
You still have to do all your research, the four quadrants that we teach, business, management, financials, and valuation.
Yeah.
So even if the market goes down 10% and this stock is still overvalued because it ran up so high in the past, and it came down 10%, it doesn't mean it's time to buy.
Correct.
Because it may not be cheap. It just has a correction, but it's not exactly undervalued.
You need to go back to the fundamentals.
Always go back to the fundamentals. Make sure it's a good price. If it's a great company, fairly valued, it's great. If it's not so great, undervalued if you want to. But you have to go back to those fundamentals. It's not just about 10% buy. Just want to make sure, because in case it wasn't clear. Right. Yeah. So again, back to the S&P 500. The S&P 500 is, before the crash, was really expensive. Its PE was the market PE was about 25.
Yeah.
So that's about the historical high. It's gone down 10%. Is it a buy? I would say is like, maybe, it's not exactly cheap. It's only gone down 10%.
Correct.
Yeah, because so is the whole market. So I wouldn't just buy the whole S&P 500 because it's not exactly cheap. But, I mean, you can still look at the whole market as a way to invest into.
Or if you're looking for ETF, I think you can do your.
Yeah, you can look at ETFs, but I would probably wait for the S&P to go down some more to a more reasonable PE before I buy the S&P. But when it comes to individual stocks, and then we look at the historical averages and all, this is really cheap because of this crash, then that's when we look at it.
Yeah. So alternatively, some people really don't want to miss out this kind of opportunity, right? Because they see there's a 10% correction. What you can do is, instead of 3 tranches, you break down to 5 tranches. So you can do now your first tranches.
Yeah, you could do that.
And then now you have after the second, third, fourth, fifth. So your third will probably be our second. Your fifth is going to be our third.
If it goes down to like that way, you could do that. But so I just want to make sure that we just to go back to the fundamentals.
But I'm really glad that I think a lot of our
great question, by the way.
Our attendees are asking a really good question. No one is panicking. I think that's exactly the main reason why people are coming in today to ask a lot of this question, right?
So another question: what about Parkway REIT? Let's talk about one REIT now. Parkway REIT.
Oh man, that one has gone up because of the crisis.
Yeah, that's right. So it's not. It's very expensive.
Right, it's very expensive.
So just want to give you that.
We had that in our portfolio, but we bought it some time back. Right? And it's not cheap.
It's not cheap. The yield is maybe like 3+%.
Yeah,
I think, if I remember. So probably want to wait for that. Yeah.
Okay. So, and I think Jimmy asked, any thoughts on the Hourglass? Hourglass. I have to be very honest with you. Victor, who is also the co-founder, the 5th person, he's more familiar with Hourglass. But as a retail business, I think they're definitely going to get affected by that. Right. We're probably going to see some slowdown in first half of 2020. Because people generally are going out lesser. So a lot of high-end product, not just Hourglass, but even LV, Gucci, Chanel, all these kind of brands are affected. That's the reason why a lot of retail tenants are trying to bargain with the landlord, right, to cut down the rent. And the landlord refused. And they can't do anything. Right. So LV decided to move out of Times Square in Hong Kong because they didn't want to give rent rebate because of Hong Kong riot situation. Right. So things are just quite bad for retail.
Okay, so KK has a question. What is a reasonable PE for S&P 500? So the long-term average for the S&P 500 is about 15.
15.
Yeah, 15.
Today we are looking at how many?
I don't know. It's come down from 25 because 25 was before the coronavirus crash. Yeah. So 15 is the average. You're looking for somewhere around there, if you want to have a look at that. Yeah.
Well, I think some questions also come about Raffles Medical. Okay, so that guy, hospital is definitely going to benefit, but then may not necessarily be true, because if you look at Raffles Hospital, a lot of the clients are actually corporate clients.
Okay.
So if the corporate clients are not hiring, I still remember when I got my first job at SIA, they asked me to go for the interview at the Raffles Hospital to do some body checkup.
Yep.
But if you look at today, I think the market is not hiring. A lot of companies are not hiring, so I think Raffles Medical will definitely feel some impact on that as well. But as a whole, they will not be as badly affected. But of course, Raffles Medical today, I think a lot of bad are reliant on the China. If the China is not successful, then I think today Raffles Medical price is likely going to continue to drop. But if their China venture succeed, today's valuation is very cheap. Okay, nobody knows whether the China is going to do well, because as we speak today, I think they are going to delay some of their construction for their second hospital in Shanghai. Was it Shanghai or Zhongqing? I can't remember which one. Should be Shanghai. And that will basically have a lot of startup costs. So it's going to prolong the startup costs. So 2020, 2021, I think we're going to see a lot of startup costs for Arthas Medical, and their profit definitely going to come down, right? Unless suddenly they have a lot of patients going to the hospital. Which is unlikely because they don't have the kind of network effect, the structure, the clinics in China as compared to what they have here in Singapore, right? Raffles Medical, when they first built their hospital, they have a lot of clinics in Singapore there. They can do a lot of referral to the hospital. But today, in China, it's very different, right? They have to start everything from scratch. So it's definitely going to take time. So Raffles Medical, personally, I'm actually monitoring a lot closely, right? And I just want to see whether the result will come. If not, it's going to be a big drag for them.
Okay. All right. So it's almost been an hour into this live webinar. So we want to wrap up maybe a few more questions that we want to cover for you guys. And then if those who are Alpha Lab members or Dividend Machine Pro members, then we're going to see you next week again. But for everyone else, just keep the questions coming. We're going to answer a few more, as many as we can, before we wrap it up. So thank you again for joining us.
Can you enlighten us on Viacom? Well, even if you stay home, you still have to send your car for inspection, unless you decided not to own a car in Singapore. So I think that is the business as usual. But of course, they have a big part of the business will come from non-vehicle inspection. That part, I think, will be affected if, let's say, oil and gas sectors slow down. I think today we are looking at a lot of economy just slow down as a whole across the industry, right? Nobody is going to get spared. Okay, and Felix asked about Silver Lake Axis. I don't see any fundamental change in Silver Lake Axis. All right, and the share price slowed down probably because some big funds trying to get out because of the low liquidity that Silver Lake Axis had. That's why the price came down. All right, so that's probably the main reason. So it's dropped below 30 cents. I saw it. Right.
Keith has a question. What if the market doesn't go to 20%, 30%, and then it goes up, and you only deploy one tranche? So what is your response to that?
Okay, that's a good question.
To me, it's like, I got in.
You got in,
I got in. So it's okay.
Put some of your money to work. And for the rest of capital that you have, continue to look, right? I mean, every year there are opportunities. There are certain crises that are specific to the industry, not necessarily to the whole economy. Like some companies, sometimes the opportunities just come up. There's a time we can start to go in and invest.
I mean, a market crash is a great time because a lot of companies come down. But it doesn't mean outside of a crash, you won't find companies to invest in, because some companies have their own temporary problems, and there may be a great time to look at that, and then you can invest. So don't worry. I mean, you just want skin in the game, but don't go all in, because it really can. The scenario of like 10%, it goes down some more, and then
now we are just on the first wave, right? Second wave, not yet.
It's 10%. It's not like 10%. It's not like 20, 30%. It's 10%, and I think it's still a reasonable drawdown. Okay, let's see if there are any more questions.
I think Kingsman. I think somebody was asking about Kingsman. I think I'm quite negative on Kingsman versus 3 to 4 years ago. I think Kingsman's business has been badly affected. First, retail has slowed down quite a bit. I think so. A lot of retailers are cutting down on the renovation and stuff like that. So their margin has shrunk quite a little bit. And they're trying to venture into some IP business, basically the one that we went the other time for.
That was the Nerf experience.
Nerf guy.
That was okay.
I think it was terrible. I don't think that is gonna work. I think they're gonna close that down, especially COVID-19.
I think the thing with
people there.
The litmus test with any activity is, would you go back again? Because if you don't go back, then everyone's just gonna go there one time, and then it's not sustainable. Disneyland works because you go back to Disneyland again and again.
I'll never go back to that.
But the Nerf experience, we went, and it was like, I was climbing walls rather than shooting guns. And I wanted to shoot guns,
I wanted to shoot guns.
And it just wasn't the best. So I didn't want to go back. If I don't want to go back, I think a lot of people are not going to go back. And then it's going to be a huge issue for Kingsman, because they sunk a lot of capex into that, So... you can go find out for yourself whether you you light Nerf and
Yeah.
go and shoot the guns if you get the chance to shoot. You don't really get to shoot a lot.
You wouldn't want to shoot now because of the COVID-19.
Yeah, so that's my take on it. Yeah.
Okay.
Yeah.
So I think somebody trying to ask about Hatalega, so he's just spamming. Okay, so I'll just try cover Hatalega because we're I mean, at least you try and catch my attention. Raymond, actually. Okay, Hatalega, I think. I think they're going to be the beneficiary for this COVID-19. But even without the COVID-19, they have been growing very well. We actually regretted selling Hatalega way too early many years ago. If we had kept it until today, it would have been multi-backers. But after I get out from Hatalega, I didn't go in. Today I look at it and it just pains. Okay, it was a mistake that I learned. I shouldn't sell winning stock. Right? And today I hold on to those great companies. I clear away some of the lousy companies in the portfolio. Okay, so basically, there's this analogy that I like to share with you when it comes to portfolio management. If you have a portfolio, you just look at it as a garden, all right? And when you have the garden, usually you want to have beautiful flowers. And beautiful flowers are your good quality companies. Those are your winning stock usually. And bad companies, fundamental that has deteriorated, those are your weeds. You want to cut them, you have to cut them off, right? You don't want to cut off your flower because at the end of the day, become weeds, right? Instead of flowers, right? So you have to focus on cutting off the weeds. You will grow for sure, but you have to keep on focusing on cutting them and then keep on focusing on growing the flowers. So there's an analogy that I think I can give it to you. Right, and some Sally asked about Union Energy. I have never looked at the company before, so I'm sorry. Right, and China Aviation Oil, I have friends who work inside. Right, never look at the company as well. Right, and Singtel is a weed. Okay.
Singtel is a weed?
Is a weed.
A weed.
I don't think. Alright. Okay, I won't exactly say Singtel is a weed. Right, no comment on that. But because the business is still holding up quite well, I think it's just that it will not grow. You're probably going to see declining revenue because of the competition. India business are also struggling.
It's just a tough industry.
Tough industry, right? And,
right now.
And a lot of them are started to spam me on the companies.
Oh man, we should have.
Okay, I shouldn't have give you that tips. Raymond, he started that first, Raymond. Okay, and then Netlink Trust, okay, Jocelyn have been spamming that, so let me try to answer that. No impact because we still need this internet connection, so we need to pay.
It's a monopoly in
Singapore, right?
So
Singtel still need to pay Netlink Trust, which is owned by them anyway. So I think it's a business as usual. It's also a good company. It won't change that much. There are a lot more companies, and a lot of them we will cover again next week in a lot more details. Okay, including the evaluation, the financial analysis, and also the business fundamental. Okay, today we just don't have the time, but we want to, get you guys started to look at companies. That's why we have this last minute webinar, right, to share with you. It's time to look at stock market. If you have been waiting or you have been busy, spend some time, spend the whole week looking at companies.
So I think we should wrap it up. I think it's been about more than an hour already. Thank you so much for joining us. I think thank you so much for your questions, because without those questions, we really wouldn't have been able to add what we know and share all our insights with you. So thank you for asking your questions, spamming your questions and all that. So what was it?
Replay.
Yes, we're going to have a replay
yes.
link. So an email will go out with a replay link. And you can listen to this again. Right, and see our two faces.
Okay, I'm glad I see a lot of thanks that we are receiving. Thank you so much, guys.
So again, once again, we want to go back to the point. We've talked so much about the companies and all the different, our opinions on all that. Again, it goes back to the fundamentals. We want to buy great companies. We want to just fill our portfolio with great companies. Market crash like this comes, is just an opportunity to have a look. And if there's an opportunity,
so any companies that we mentioned here today, go back and do your homework. Right, it's not a recommendation to buy or sell anything that we discuss here, but please spend some time reviewing your stocks today. So this is a public webinar, so we really don't want to. We're not telling you to buy or sell anything like that. And we can't.
We can't anyway. So please always do your homework, due diligence and all that. And what is there any more?
Where can I get a fifth person thief shirt?
T-shirt. Okay, this is a limited edition T-shirt. I'm serious. I only printed 20 copies of this. Yeah. So
we are not going to give it away.
We're not giving this away. So we'll see how it goes.
Okay.
If a lot of people really like it, then we'll go print more, and then we'll find some way to give it to you guys. But at this point, it's limited edition. We only have 20 pieces. I'm wearing a large. He's wearing a medium.
You should sell the T-shirt. Some people suggested.
I would give it away if you're one of our valued customers. We just will give you a T-shirt. It's like, it's actually really comfortable. Yes. I like this material. But we'll see. We'll see.
Okay. Some people give lah. T-shirt is nice.
We'll see how it goes. Right. But thank you for the feedback.
Thanks.
So
okay.
Thank you once again. Thank you for joining us.
Take care and wash your hands.
Wash your hands. Wash your hands, and we'll see you. We'll see you around. And if for Alpha Lab and the Dividend Mission Pro members, we're gonna have 2 separate webinars. We'll see you next week.
Okay.
All right. So thank you so much, and we'll see you around.
See you guys.
Thank you.